Today, GameStop drops its crypto wallet because of regulatory uncertainty. MicroStrategy reveals it bought thousands more Bitcoin in the second quarter. And John Wu, president of Ava Labs, weighs in on the privacy concerns associated with Worldcoin. Welcome to CNBC's Crypto World. I'm Kate Rooney. Digital currencies rebounding from yesterday's losses. By noon Eastern, Bitcoin jumped back above $29,000. Ether, meanwhile, traded above $1,840, while Ripple's XRP traded at 69 cents. Okay, let's talk about some of the top stories. MicroStrategy is holding more and more Bitcoin. In its second quarter earnings report, the company announced it had bought more than 12,000 Bitcoin. By the end of July, held about $4.5 billion worth. That's at current prices. The company's chairman, Michael Saylor, joined CNBC's Squawk on the Street this morning to discuss the company's commitment to Bitcoin, despite the headwinds for the broader crypto market in recent months.
Bitcoin itself is up 145% since we started buying Bitcoin. And that Bitcoin position creates the volatility in the stock that allows us to borrow and raise capital cheaply in order to buy more Bitcoin and grow the business. Bitcoin is emerging as the safe haven institutional asset if you want to play this space without trying to parse through the politics, the legal, and the regulatory complexity.
Next up, GameStop is giving up on its native crypto wallet. The retailer announced on the wallet's website that due to regulatory uncertainty, support for GameStop wallet will end on November 1st. That's when the iOS and Chrome extensions will be removed from the market. GameStop originally jumped into the crypto wallet game in May of 2022, seemingly as a way to capitalize on both the meme stock craze that sent its stock soaring in 2021 and the crypto craze that drove digital asset prices to all-time highs. Last up, Ripple just released its latest transparency report, and the company's CEO took the chance to hit back at the SEC. In a post on Wednesday, Brad Garlinghouse said, quote, "We began these reports to voluntarily provide updates given our XRP holdings. Sadly, they were used against us in the SEC lawsuit." He went on to say that the reports could look a bit different going forward. This latest report shows the total amount of XRP held by Ripple grew by more than 44 million, while just under 42 billion tokens remain in escrow to be released at a later date. All right, let's talk a little bit about Worldcoin for today's main story. The scrutiny around Sam Altman's eye-scanning tech is growing, with Kenya now suspending the project over safety concerns. Crypto World's Talia Kaplan spoke to John Wu of Ava Labs about Worldcoin. He also gave his insight on the Curve finance hack and explained Avalanche's latest program focused on tokenization.
Worldcoin, the crypto project created by OpenAI's Sam Altman, went live last week and is already facing some criticism over the project's digital identity service. And some regulators overseas are now investigating the project. What do you make of this new crypto project and the privacy concerns associated with it?
I mean, there's two things. There's so many things going on with it. Having privacy, digital identity, and having it to yourself, self-sovereign, meaning like self-custody, is a big theme in all of the world, not just in Web3. I think some of the criticism surrounding this is related to how the token was sold, and it was done overseas. So there's a lot of issues surrounding the mechanism of it in terms of how the technology works, as well as how the transaction was executed, especially in geographies overseas. But the concept of providing everyone with some sort of privacy, some sort of identity that they can actually own and use to their own disposal, I don't think there are any issues with philosophically what it's trying to do.
What do you think about the increased interest in AI and the fusion of AI and crypto? I mean, I saw that back in June, Ava Labs actually announced the launch of Ava GPT, as blockchain companies have been trying to incorporate the technology. What prompted Ava Labs to create Ava GPT? Did the heightened interest in AI have anything to do with it?
Well, thank you very much for asking that question. Yes, we did do that. And obviously it segues well from Worldcoin. Sam Altman obviously is one of the founders of OpenAI. I think AI, everyone's learned, not just Ava Labs or other crypto, and everyone from various industries learned that AI can help you make better, faster decisions, and it can help you basically save money in terms of streamlining the supply chain of whatever you're doing, cutting out middlemen as well, and allowing you to do it faster and cheaper and more efficiently. So the things that Ava Labs have done with AI are one, allow the developer material openly so that AI can search it properly so that developers can have better and speedier ways to deploy on the Avalanche blockchain. Also, we use AI for tools, whether it be like DALL-E or others to help us design better and faster. So frankly, AI helps all industries, and Web3 is no different. I think what's interesting about what blockchain can do and to help the growth of AI is the provenance in the data. So, AI and algorithms are only as good as the data. And if blockchain could be the provenance, distributed ledger, and the provenance of that data, maybe the AI hopefully the algorithms will work better. Also, algorithms need to be tracked with which one is good and which one does what it says. So, using the blockchain to help track those algorithms and create a marketplace for that are other projects that people are doing with AI. And frankly, I think there's a lot of news recently, unfortunately, that we're seeing since the weekend to now. AI can also help blockchain by auditing code faster or better so that there is fewer hacks in the space.
Just this week, we learned that DeFi exchange Curve Finance was hacked, potentially leading to the price of Bitcoin and other cryptocurrencies to drop as crypto sentiment had been compromised. The platform tweeted over the weekend that hackers used a bug in Curve's underlying code to trick smart contracts, allowing them to drain a number of liquidity pools. It's important to note that according to Chainalysis, crypto hacks have actually slowed in the first half of this year thanks to low liquidity. But what do you make of this recent hack, and what do you think can be done to prevent something like this from happening on other platforms?
First of all, it's very unfortunate, and I feel for the retail people who lost money here. It's not good. Listen, what's happened mechanically and what's going on has been well reported. But what I think with this situation, big picture wise, obviously it's very bad for the space from an asset class perspective. There is a lot of people affected from this, and because the space is very self-referential, whatever happens in the curve pool and people losing money there and triggering stops or whatever will lead to other areas of DeFi, and it could cause a cascade effect. Not that different, frankly, from what we see in traditional finance when a big hedge fund or a big bank, and this is why they say too big to fail, it can lead to a cascade effect elsewhere. So that possibly could happen from an asset perspective. But also there are some things that we need to address from a fundamental perspective. The space really needs to do four things, I think, in my opinion, at least three out of the four. One, the space really, I think, needs to realize that the code in the smart contract needs to be better audited. So either perhaps, third-party oversight, or we talked about it earlier, infusing AI technology to better audit the code. The space also really needs to remove, I think number one, needs to remove bad actors. And I think good news is that is starting to happen. We've got MiCA framework in Europe. Asia is doing a lot. The US is, especially, recently, we've seen a lot of movement in Congress trying to push bills through to identify or classify assets and talk about how things are sold properly. And that is all going to help remove the bad actors. Three, I think there should be some sort of standardization for issuing tokens so that when there's standards, it's the issuing of these tokens becomes, I don't want to say regulated, but has a protocol for doing good instead of bad. And lastly, I think very important, we need education for the retail in this space. It's no different from how now grandmothers out there know not to give out their personal PII information on the phone to a stranger. There needs to be an education process for retail people. These 4 things have to happen going forward for this space to grow.
Last week, the Avalanche Foundation launched a new initiative focused on asset tokenization. The program, called Avalanche Vista, aims to demonstrate the value of tokenizing real-world assets like real estate and commodities. Can you take us through how this works and what was the driving factor behind this initiative?
Yeah, well, tokenization, Ava Labs tokenization is one, if not the killer app for the blockchain. Tokenization, just to reiterate, is, the simplest definition is to basically transfer the right of ownership of something or a cash flow stream or an asset and transfer that right digitally onto a blockchain. So it becomes immutable and has transparency, and so everyone can see that transaction. And doing this way has so many benefits. It makes it easier to issue, to own, and to transfer those assets. Now, when you tokenize, generally speaking, on the highest level, you have 3 major benefits. One, it's far more efficient a process than how it's done traditionally. 2, it also could create more access to individuals and to other players around the world that could not get access to the same asset. And lastly, we're all hoping that one day it will create more liquidity for these private or hard to find assets. I think this program was done by the foundation because they see that we need to jumpstart the liquidity benefits of the space.
Wu went into greater detail on that new initiative and weighed in on recent regulatory developments in the US. You can check out this full interview on cnbc.com/cryptoworld. Okay, that's it for today. We'll be back again tomorrow with a lot more. We'll see you then.